every time the markets get choppy, people literally do the exact opposite of what they should be doing, right? Emotions run high, we make decisions that we probably shouldn't, and maybe you're watching this video and markets are choppy right now. Maybe they're not. Maybe we're hitting all-time highs, markets are green, but what I can guarantee you is the markets will be choppy, and that is when opportunity presents itself. So as of this recording, markets are pretty choppy, and again, I see a lot of people losing money. Either they're buying highs, selling low, they're selling at losses, they're seeing impermanent loss. We started writing this book really 6 months ago, but this book really started being written probably 6 years ago, at least from the knowledge and the information we've been getting. We worked with over 5,000 members, over 400 clients in Fast Track, and this book is really just a collection of everything we've learned, everything we've taught. So if you do find yourself a little emotional or reacting to markets or not knowing what to do next, take a couple evenings, study this book. I promise you're going to get something from it. And I thought I'd shoot a video and go through some of the chapters. We'll highlight some things, we'll double click, kind of give you behind the scenes of what you can expect. When we first wrote this book, it was over 300 pages. We did condense it down to around 250, 260. It is a study, so I will be upfront with that. If you're just looking for something easy to read and entertaining, this is probably not it. But if you do want to learn about crypto, DeFi, and really master the topic, then this book is for you. We broke it down into 5 parts. Part 1, we call it the Underdog Awakening. That's like learning the financial system, understanding inflation, understanding where money comes from, what is money, and understanding how fundamentally Bitcoin and crypto set off to, I wouldn't say have people escape it. I actually don't think you can escape from the system, but you could opt out from the system. So chapter 1 is really all about the system, how the system is optional, and why Wall Street doesn't want you rich. I don't think people realize when you're investing traditionally, the fees that you're getting charged are actually ridiculous. When I started investing, I was 24. I was working on the oil rigs, and they were matching my contribution to some kind of mutual fund that I was invested in. And what blew me away is every year I would get a report that I made 6% or 8% that year. 5 years later, I went to check my actual investments in my portfolio, and I figured, well, I should be, 8 times 5% richer, so call it, 30%, 35% more money, and I didn't. And I was curious of why. And when I double clicked on my portfolio, I actually started realizing that the way that they report is actually fundamentally flawed. We could talk about that for hours, but they were also charging me management fees every year, and they were charging me those fees whether I made money or not. And I realized, okay, this is kind of not scammy, but it was really, really against me. And that's when I really started double clicking on crypto and realizing, wait, maybe there's a better way. So chapter 1's about that. Chapter 2 is called Bitcoin 101, the foundations of a new financial world. We're really diving deep in like what Bitcoin is and why it fundamentally has value. Chapter 3 is all about fiat. For lack of a better term, we do kind of shit on fiat, but inflation's out of control. Fiat is worthless. The goal as investors is to take earned income, usually in fiat dollars, and invest that in something that has a high potential, I'd say, of future appreciation, something that'll be worth more in the future than it is now. Fiat and the dollars in your bank account are really like a capturing of the time and the energy you put in for it, because you exchange your time and energy and expertise and work in a job or a business, or whatever that is, and you collected fiat. The goal of investors is to take that and, again, invest it in something that has a high likelihood of at least maintaining its value, so you can actually have a store of value, or appreciating. Chapter 4 is about blockchain. We really break down what the blockchain is. And chapter 5 is all about asymmetric bets. You're going to learn a lot about that throughout this book. Part 2, we call it the Crypto Wealth Foundations. Chapter 6, 7, 8, 9, 10 is all about that. We really start with the view of like, if I had $100 to just invest. Now, again, that's not going to make you rich. You're not going to become financially free with $100. But it's kind of like I would call it the cost of admission, or it's $100 to really learn it. So what would I do with it? How would I invest it? How would I distribute it across 5 different cryptos? What would I do in DeFi with $100? And again, I'm not promising you're going to get rich. I mean, this whole book there's nothing about getting rich in it. But that $100 is your tuition. You're going to pay some gas fees. You're going to move it across different blockchains. You can invest in different cryptos just to put some reps in. I think a lot of people, and I can see this in myself with certain types of investments, like when you don't understand something, you're hesitant to actually do it. But the more you understand something, the less risky it becomes because your knowledge and understanding of it goes up. So, if I really just like the question of what is the best investment? Because if you don't know anything about real estate, don't touch it. It's not going to be a good investment for you. If you really, really learned it and mastered it, it could be lucrative. Crypto, I always tell people, I'm like, crypto is not the best investment. It could be the worst if you don't know what you're doing. And for most people, again, they lose money over and over and then they write off crypto as a scam or that it doesn't work for them. They just didn't understand it. The more you understand it, the better you'll get at it. So chapter 6 about investing your first $100. Chapter 7 and 8, actually, we're really talking about custody, how centralized exchanges you don't want to keep your funds on centralized exchanges, and how you can move it into self-custody, cold storage, etc. Chapter 8 is about not your keys, not your wallets. We actually lay out some of the best self-custody wallets and how to actually control and own your actual crypto. Chapter 9 is a little more technical. We talk about Ethereum and smart contracts, something you need to know. And chapter 10 is really about protecting your wealth. So security and making sure you don't get hacked. A lot of people who lose money in crypto was because of user error. They clicked on the wrong thing, they clicked on a phishing email, or they just sent money to the wrong wallet. They don't have, I'm flying planes right now. Before you do anything, you go through a checklist. And it's like 98 or 99% of almost all aviation accidents are because the pilot simply didn't go through the checklist and they missed one thing. To me, crypto is kind of the same thing. You have monthly audits. You go through the checklist. You make sure that you're doing a security audit. Before you send crypto, you have a checklist you go through. You make sure that you don't. It's like the longer you do something, the more complacent you can get. We want to make sure you don't get complacent. It would suck to build a couple $100,000 portfolio and then lose it all because you clicked something you shouldn't have or you got hacked. So we're going to help you avoid that. Part 3 is around market mastery. You can't predict what crypto is going to do next, but there are seasons and there's indicators and there's things that happen in the market that are quite predictable. Again, we're not timing the markets, we're not trading with the stuff we learned in here, but chapter 11 is all about market cycles and psychology of those market cycles. It's once you see it, and we do show some charts and we talk about it, once you see it, it's hard to unsee. And again, history doesn't repeat itself, but it rhymes. It does. There's some predictability. And again, if you think about it, this really inspires me. Every candle you see on a chart can't predict the future, but real time in history, you can see human emotion because that's all people buying or selling. They're reacting to the market and they're doing something. And you can look at history and be like, oh, when this happens and that happens, most of the market, which is just made up of humans like you and me, are either buying and selling. And you can start seeing patterns, and we're going to break that down. Chapter 12 is all about the HODL philosophy. Most people would be better holding their crypto instead of trading. We don't actually like trading. We actually speak against trading a lot because, again, people think they can beat the market and they end up losing everything. You're much better off holding your crypto, that we call that the treasury. And then we're going to talk about this in part 4, but then doing DeFi, creating yields with that treasury. Chapter 13 is about why chaos creates wealth. Without volatility and this is just a life principle, but without hardship, without volatility, without that chaos, it's hard to find opportunity. That's why I like markets and I love crypto because it's still uncharted. We're still early, and with that, a lot of volatility, hence a lot of opportunity. Chapter 4 is due diligence before you buy anything. Here's a checklist you go through. Chapter 15 and chapter 16 is about portfolio design and when and how to take profits. I would like to repeat that for about 10 minutes straight, but it's like take profit. When you're in profit, take profit. Most people don't. We're going to make sure you're not one of those. Part 4 is about DeFi. So it's about becoming your own bank. Having not just custody of crypto holdings and holding for a long term, but actually turning those holdings into, we'll call it cash flow, we'll call it income, we could call it yields. You get the point. So chapter 17 is about building your own financial system with DeFi. How do all the pieces fit? Chapter 18 is about DeFi basics. We're going to talk yield farming. We're going to talk about liquidity provision, and we're going to simplify it. We're talking full range liquidity, making it really, really simple. Again, I told you this book is going to be, it's a manual. It's not It's a study, so just be ready for that. Chapter 19 is impermanent loss. Don't click off the second I say that. I know a lot of people are terrified of DeFi because of impermanent loss. In fact, every time the market's correct, I can see in my YouTube comments people, I don't know why the crypto space does this, but it's like, ha ha ha, how's your impermanent loss? And I'm like, I don't care. You can set up a portfolio to not only hedge against it, which is a more advanced strategy, but as long as you're invested in assets that have fundamental value, it's nothing to like fear. Now you can't avoid it, but you can manage it. We dive deep in chapter 19. At chapter 20, velocity of money, enough said. I have a ton of content around velocity of money. It's like compound interest is cool. Velocity of money is the real wealth builder. Chapter 21 is advanced DeFi. So we get concentrated, setting ranges, how we think about that, strategies around that. And chapter 22 is the future of DeFi. So that's more of a zoomed out chapter, looking out 10, 20 years. Where is this space going? I will ask you this question. You can actually leave it in the comments. Do you think the crypto DeFi space will be bigger in 10 years, 20 years than it is now? If your answer is yes, which if you really think through that, it's almost an inevitable yes. It's like, why not start now? I think everyone looks at markets and is trying to time it and wants a bit of a better deal. It's like, who cares if you buy Bitcoin at 120 or at 80 if you think it's $250,000, or as I do, it's $1 million asset at some point in the future. It's only getting more scarce, and fiat's only being debased, devalued. So to me, it's like 120K is a good deal, 80K is a bit better, but now is a good time to start if you have a long-term approach. So we talk about that in chapter 22. Finally, part 5, and I wanted to make this part 1, but our publisher was like, keep it to the end. To me, this is the most important. It's the mindset around it. So we got 4 chapters on it. Chapter 23, finding your why. I think a lot of people will start in crypto or start a business or just start investing in general, and they quit when it gets hard. And maybe it gets kind of hard and they kind of don't quit. And then it gets harder and they're like, is it worth it? And then it gets really, really hard and then they quit. Very few make it through that, what we call the J curve, which we do have a chapter around it, but that like, it gets hard, it gets hard, it gets hard, it gets even harder, and then it gets literally impossible, and then everyone quits, and then only crazy people continue, and then there's you, like the person that didn't quit. And we could call it, they were just motivated and they really, really wanted it, but behind all that is like it really, really meant something to them, and they had a really deep why. And if you have a deep why for why you actually want to succeed in this space and who it's for, you're going to make it through any crypto winter, any bear market, any portfolio losses. I've lost hundreds of thousands of dollars investing in crypto, and every time it sucked. But my why for this was really, really powerful. Chapter 24, why everything gets worse before it gets better. We kind of just talked about that. Is the J-curve principle. Chapter 25 is risk and reward. Basically all of investing and really any risk you take, whether you know or not, your brain's running through some kind of scenario of, is this risk worth it? Sometimes we make a good call on that. Sometimes we don't. But if you can actually understand the formula, and before you make a decision or you click a button or you do anything in life, you're really going for risk and reward. We call it asymmetric investing. If I do this, it could change my life forever if I'm right. And if I'm wrong, okay, it'll kind of suck. I'll learn some lessons, but I can recover. I actually see entrepreneurship as that. It's like if I'm right, if I can just do it right once, it'll change my entire life forever. And if I get it wrong, it's like, cool, I'll learn some skills and I can start a new business. And I thought about that when I was 25 of like, what am I going to do for the rest of my life? Where's the most upside? Oh, entrepreneurship. And then I learned about investing. And I'm like, there's only upside if you do it right. The downside of not investing is all your money loses value. So to me, it's like a no-brainer. So that's that chapter. And the final one is wealth principles. That one we really zoom out. I've been very blessed and fortunate to join a lot of masterminds and meet a lot of people, from billionaires to people worth a couple $100 million to people being worth a couple $1 million. But to me, like every single time when I meet someone successful, I'm always kind of obsessed on not how you did it, but how you thought about it. Like when this happened, how did you think through that? What are your beliefs here? Like what made you think this was a good idea? What was your thought process? We break a lot of that down in chapter 26. So again, if you do want a copy of this book, the link will be in the description or the bio. 100% of sales go to charity. With that said, grab a copy, grab a few, give them to some friends, enjoy the read, enjoy the study, use it, like actually apply it. I think actually what bothers me, maybe there's a part of me that is kind of bummed out, but I know that there's probably a book published every single day, and a lot of people read, but very few actually do. And I really want you to be one of those who actually do something with it. So just promise me that when you do get it, study it, apply it, and then hand off the gift to someone else. If you do that, my mission with this book is accomplished. And with that said, enjoy the read, and we'll talk soon.